Welcome back to HRE Insights in 30, where we spotlight the experts, innovations, and ideas shaping risk and compliance today. I'm your host, Justin Muscalino, CEO of High Risk Education. Today, I'm joined by Christina Rea, founder of Raycor Consulting, and she is also a partner with HRE. Now, with Raycor, Raycor helps financial institutions and fintechs really strengthen their compliance frameworks, really understand and strategize on emerging risks. And also, they help build programs that stand up to regulatory scrutiny and more. And believe me, I have experience in that matter. So her experience is second to none. Now, Christina brings an incredible and deep experience from both the legal and compliance side of the industry. She's worked with pretty much everybody, including banks, MSBs, fintech partners, really on everything from AML and fraud prevention to policy development and regulatory remediation. So you can think of Christina as kind of like a one-stop shop. So, in this conversation today, we have three things that we're going to conquer. One, how fintechs could balance innovation with compliance. Two, what oversight really looks like in practice. And three, how regulators are reshaping expectations in this sector. Christina, welcome to the show. We're thrilled to have you.
I am really honored to be here, Justin. Thank you very much, and happy Halloween, everybody.
Yeah, happy Halloween. I almost forgot. Today's 10/31. Wow.
I know this year went fast.
Yeah, I think I'm gonna run out and put on my costume after this, but you know, yeah, I keep forgetting it's Halloween. But what I want to really get to first before we get into the core of the conversation is really your career path because it's kind of interesting. Now, your career has really spanned, let's see, legal practice, compliance leadership, and now, consulting through Raycor. So, what really inspired you to focus on the fintech and financial crime space, and how has that developed or really shaped your work today?
Yeah, that is a great question. And you're right. It has not been kind of a traditional path. And there were moments when I doubted myself, but now looking back on it, I wouldn't have it any other way. Really, the genesis for all of this is I graduated from law school right after the 2008 recession. And let me tell you, when you go to law school, you're pretty much banking on graduating and getting that, big law firm summer associate job.
Mm,
Those dried up. So, myself, a number of colleagues and, former classmates found ourselves in this weird space, maybe, for one of the first times in history where you go to school and you get this education and there's no guarantee of anything going on. So for a few years after law school, I did a little bit of legal practice. I did a lot of contract work just to kind of pay bills. I even took a job doing financial analysis just because I needed something. I was getting desperate and I was like, all right, let me fall back on my finance background because that's what I did before I went to law school. And, it's just really it really instills in you a desire to make a change. So as I was kind of going through the windy road of figuring out what am I going to do with this expensive degree, um, I started noticing jobs in compliance. 2011, 2012 happened with all the consent orders against the banks. And they started hiring hand over fist anybody that had any kind of parallel experience, including lawyers. So I started off doing, anti-money laundering compliance for traditional banks, how most people get started in this field. And just seeing what I saw there was really irritating because the goal was supposed to be cleaning up the mess, and the goal was, do as little as possible to get the regulators off our back. So I did not make a lot of friends there, and that's okay. I Compliance officers don't get into the field to be popular.
mm.
So I left TradFi and I had an interesting opportunity to work for a regulatory tech company that was trying to build smart data solution for KYC. And they started talking to me about blockchain. And I'm like, I don't know what that is. And I started learning what's blockchain, what's crypto. And then, the pandemic happened,
Yeah.
another once in a lifetime event. And I was very fortunate, when people ask me about anything to do with my career path, I wouldn't be where I am without the people I've met along the way. And I would never want to give short shrift to everybody, whether it was an adverse experience or a positive experience, because in some form or fashion, it helped me grow and it helped me get to the place I am now. So after a few years working in-house as chief compliance officer for a handful of crypto firms, I decided, it's time for me to branch out on my own, get the experience I want to get, not be siloed, into one compliance vertical, or, be told by the business that my goal should be to onboard as many people as possible. So I started Raycor with the goal of providing fintechs, startups, crypto companies, community banks doing banking as a service, a new way to approach compliance, where instead of, oh, this needs to be a check the box exercise and we just got to get it done, I try to educate on how proper compliance, especially from the outset, really does, trickle down to your bottom line at the end of the day. You're not wasting as much time and resources if you get it done right the first time. So I've been very fortunate to work with a lot of great clients and really expand my skill set and learn, different areas of finance and different areas of compliance. So it was a long, windy road to get here, but I'm glad I'm here.
What the two things that I'm thinking about right now is like your resilience and that entrepreneurial spirit, which we don't all have, right? I mean, you had to push through barriers and, I guess environmental circumstances
Mhm.
that are unpreventable. So that's pretty impressive. Now I want to segue from your career, which again is very impressive, to really talking about, one of the core topics we have on our agenda today is fintech risk.
Mhm.
Now, as you know, like fintechs, they often operate in, I want to say a gray area, but kind of between financial services and tech. So, like from your perspective, what are the biggest compliance and risk challenges they're facing today?
Mhm. Yeah, there are a lot.
Yeah, you know.
One of the biggest challenges for the fintechs themselves, and this is something I spend a lot of time doing education on, not only with my clients, but just the industry in general, is to not treat compliance like an accessory. Um, it should be brought into, I like to say it should be brought into the lab. And what I mean is if you're building a product or if you have a product and you're building new features, and you're saying to yourself, okay, I have to have my product team and my engineering team ready to go, and I have to do these sprints with them. You need to bring a compliance person in there because the sooner you bake compliance into the program, and figure your product and figure out exactly where it needs to go, the easier it's going to be for you down the road. It is much more expensive and time consuming to try to shoehorn it in after the fact. So I find that the most successful businesses treat compliance, as part of their design into their product at the outset. I would rather they overinvest early and then underpay later instead of overpaying through remediation, onboarding delays, lost banking relationships, or the worst of all, poor regulatory exams, and high risk findings. Um, you mentioned the gray area, and that gray area is shrinking pretty quickly. And what used to kind of be seen as good enough for early stage no longer is. It used to be that if you were, an early stage or even kind of pre-launch fintech, you could get away with not doing certain things or not having certain components of your compliance program quite up to snuff, and that has gone the way of the dodo. Regulators, state regulators, if you're going for licenses or banking partners, they want to see almost fully fleshed out programs before you've even launched. That has been a central theme I've seen a lot this year. So, doing just the bare minimum to get the application or to get up and running, it does lead people into trouble pretty quickly.
It's interesting. Like when I was in corporate, all those years, I always thought of compliance not as like the police or, check the box, but really like revenue enablers. You
Hmm.
I mean, if you treat them that way and you educate them on the business, they become very valuable. And, I wish I could see that more today. I guess I'm on this kick where try to give compliance officers all the credit for the work they do, but they could provide so much more insight, not just simply say no all the time.
Yeah, that's the rep we get, is the
Yeah.
bookman who's here to say no. I don't want to say no, I
Hmm.
want to be popular. I want to have friends. I'd like to say yes. Um, and I tell people I am a compliance officer, which means ultimately I am your advisor.
Yeah.
Well, my job is not to sit there and tell you, no, you can't do things. My job is to inform you of the risks. If you choose to go down this path, these are the risks it's going to expose you to. It's ultimately on the business, the CEO, to decide the risk appetite. I can give them all the evidence and I can give well-written memos and I can give lots of documentation. But at the end of the day, the business will ultimately make a decision on how much risk they want to accept. Now, there's certain components of regulations that you have to do. If you don't do them, it's a big problem. Like if you don't have a chief compliance officer, if you don't have a training program, if you don't have an independent audit, okay, that's massive and you're gonna get fined and dinged for that. Everything else after that, there's really not a lot of prescription in the regulations. So it comes down to industry best practices, good guidance, and figuring out what is an appropriate, risk-based approach. That term is thrown around so much in this industry, kind of lost meaning, at this
Yeah.
time. But when I get asked questions from clients, I was just asked a question from a client the other day. They're an interesting kind of setup. They're not a financial institution as such. They're more of a charitable organization, but they do have components of financial services where they have lenders, borrowers, grantees. And their chief compliance officer made the decision to have a voluntary AML program. So they bring me in to, remediate findings or do trainings or help draft SOPs. And we were just having a conversation yesterday, about one of the groups and what information do they actually need to collect. And, because they deal with entities, we were talking about like articles of incorporation, and formation documents. And he said to me, I'm going to get a lot of pushback on that. They're not going to want to give that. Do I have to do it? And it's not my job to tell him, yes, you have to do that because it's really up to them ultimately, beyond some of the, standard pieces of KYC we collect. It's up to them to make a decision. Ultimately, do we know who our customer is? So I said, this is an industry best practice, but it's up to you in the business to make a decision. If you don't collect that, what are the potential risks? And let's walk through what that means. And we ended up coming to a compromise. Okay, we'll ask for all the other documentation. This specific thing, we will only request it if we're seeing some red flags or something unusual is coming up. And they didn't have a problem with that. And, a lot of compliance officers would just say, yes, you have to do it, or no, you don't have to do it. But but a lot of components in compliance, if you're making it a conversation about risk, like, okay, if we didn't do this, what are the risks?
Mhm.
And, are there workarounds for it? Like, do a first level collection and then a next level if, you need more due diligence. That is a better way of getting people to understand, what compliance can really do for you and that it's really an advisory function instead of a telling you what you can and can't do function.
Yeah, no, I totally agree. One of my, I would say, top five corporate moments was when I was in a meeting once with a compliance officer in the business, and the compliance officer said, "No, you can't do that." I'm like, "Oh God." But you know what she said? But let me give you two options you can pursue.
Yes.
And I it almost felt like a proud father and their kids like um getting out of the nest. It was like one of my top five best experiences in corporate. I'll never forget that. But thanks a lot for that, Christina. I do want to turn to a little bit more like of oversight and collaboration when we talk about bank partners, because that's a big topic.
Hmm.
So, banks partnering with fintechs, they do often struggle to strike the right balance between, enabling growth and also maintaining control.
Hmm.
So, what does like effective oversight look like in these relationships, and where are you seeing the biggest gaps today?
Yeah, that's a great question. The biggest gap today is definitely both sides, the banks and the fintechs are trying to optimize for speed, get stuff done quickly. One thing I've always hated about compliance is bringing KPIs into the equation. Certainly, if you have somebody that's, dallying about with investigating cases and not getting through as many as they should in a day, that's a problem. But when we're sacrificing quality of investigation because we have to close a quota, that is a breakdown. That is an instance where speed should not be the priority here. Because then once something breaks, friction replaces trust, and trust is hard to rebuild. Um, I've seen a lot of I've seen a lot of banks and fintechs kind of struggle to figure out who's responsible for what. I had a payments client. They brought me on to help remediate a number of audit items. And I kept asking them, okay, you have a bank partner and they're in charge of actually filing SARs. So you send them, unusual activity reports. They make the ultimate decision on SARs. And then I forget what it was, but there was a few other operational pieces where I said to them, okay, who's in charge of this and who's in charge of that? And they didn't know. And I said, okay, let's take a look at the contract and see, if the bank laid it out and it just kind of got lost in the shuffle and it wasn't. And then so that starts a process of having to have conversations with the sponsor bank. Okay, who is ultimately responsible for certain components here? And we need to get it documented because otherwise loads of things are going to fall through the cracks. So really establishing that oversight of who's responsible for what at the beginning and, having it clearly documented, training the team on it is going to save you so much time and headache later on. You know, banks need structured visibility into onboarding decisions, monitoring exceptions, escalations, things like that. But fintechs need banks to be transparent too about, the processes and what do we actually need to be sharing with you and where is it stored? And if we're being examined and regulated, and we're being asked questions about the follow-up, do we have that kind of relationship with you where we can rely on you to assist us during that exam? This oversight relationship should be established right away. It shouldn't be like a quarterly check the box kind of exercise or a one-time due diligence binder. It really needs to be an ongoing information exchange process about how the controls operate, how the bank would like to see them operate, and what is feasible and practical for both parties on both sides.
Yeah, I almost feel like this is just basic common sense sometimes, right?
You'd think that.
Yeah, but I guess common sense isn't that common, and we have to really focus and understand. Yeah, it's crazy. But one of the topics, and I know you've spoken a lot on this, and so have I, lately, are, fraud trends, emerging threats, and so on. We're talking about like the top five: synthetic identity fraud, payment scams, account takeovers, and so much more. It's a little crazy out there. But, what trends are really keeping you up at night? And, for fintechs, how do they prepare for this?
Yeah, synthetic identity is the number
Crazy.
one. Using AI to do deep fakes, and all that stuff. It started off being kind of kooky, everyone's getting the text messages like, "Oh, hi, sorry, wrong number. Do you still want to be friends?" Like everyone's kind of caught on to that. But the fraudsters are getting more sophisticated. It's not individual. I don't know that a lot of people understand this. It's not individual bad actors.
Hmm.
Not a couple of scammers in Nigeria, or countries in Asia that, kind of are what we see in pop culture. These are organized supply chains. Like, think whole criminal organizations are developing these scams, and they're doing it in ways people would be shocked, to learn about. Um, Pig butchering is something we hear a lot about in the news, where people are targets, romance scams, that's another term for them. People are targets, oh, so and so is lonely and is on a dating platform, and then they meet somebody, oh, this person's great. They start sending them all their money, sending them crypto, it's untraceable. And then they're out their life savings and they're just totally devastated by this. But who's on the other end of that is not just, either a man or a woman that's just trying to scam you. This is likely somebody that was human trafficked away from their own country, brought to a criminal compound. They're popping up all over the place. I know there's a lot of big ones in Cambodia and Myanmar. I think they're starting to crop up in South America and probably Africa too. And they're effectively being held at gunpoint to sit there and spend 18 hours a day. They have probably 20 cell phones in front of them, reaching out and trying to scam people out of their money. And they're actually hiring psychologists to come in and work with people to figure out the best ways to carry on the conversation to, try to get the fish on the line.
That's,
It's terrifying. This is a business, and there are I've been told there are kits on the dark web that you can go and buy using crypto to figure out how to start your own, criminal synthetic fraud organization. So it's scary what's going on out there, and it's getting the part that really terrifies me is it's getting more sophisticated. The synthetic identity is becoming so easy for people not only to steal, your driver's license and your social security number, but your likeness, your voice, your face. I just had a conversation with a colleague yesterday. She said that her father, who's an incredibly intelligent man, is hip to scams, he got a phone call and he said it was your voice. He's like, my daughter, this was your voice. And it wasn't. They had done a deep fake. They'd convinced him that she'd been in a car accident and needed 40 grand in cash, and he went and did it, and poof, money's gone.
oh my God.
He he's like, I promise you, it was your voice.
That's insane. It really is. You know? All right. I don't even know how to comment on that. I just, all we could do is continuously stay up to date with the education and training and the awareness. I mean, just make people understand what's out there and kind of what's going on. Um, you know, it,
Educating not only the fraud trends, but also educating empathy around it, because
mm,
unfortunately, a lot of financial institutions, they will try to, have clean hands, oh, this wasn't our fault, they will try to, disavow liability. And it's not really going to get us anywhere. I hear a lot like the victims of pig butchering, they go to the crypto exchange and they try to get their money back. And they bring the Bank Secrecy Act into it, but the Bank Secrecy Act was designed to protect the financial institution, not the end user. And it's heartbreaking. So then we have to, if they're gonna sue the exchange, we have to try to find other, tenets of the law to bring a suit under. But people don't understand that the only laws that are really out there to protect customers they're the consumer protection laws.
mm.
Anything related to money laundering is not there to protect you from losing your money.
Yeah, I know. And the recovery and accountability. I mean, it's just a massive headache for people who were scammed.
Hmm.
You know, it almost feels like there's nothing you could do about it.
Yep.
And it's really bothersome. Like I said, it's like we just have to stay up to date and educate folks about what's going on. And I'm always proud anytime I receive a communication from my credit card, my bank about, be aware, this is the latest fraud scam that's occurring.
Hmm.
That those are kind of things I know it sounds small, but they actually really do help.
Yes.
And yeah, and I hope we see more of that. Just the awareness to customers on what to look out for. Um, but Christina, this has been awesome. A huge thank you to you and for coming on today. I really appreciate it. It's been educational and definitely enlightening. So thank you very much. And for our listeners, check out our upcoming courses at highrischeducation.com, where we're continuously helping people in these predicaments and how to handle them. But, we're also focusing on digital assets and other financial crimes that really do lay that compliance foundation. So take a look when you get a chance. And thanks for tuning in to HRE Insights in 30. Until next time, keep learning, stay curious, and take care. Thank you, everyone.